Hey everybody, we're back with a market update for November. Well, we've been saying since last year that the market is going to change, and when it does, it's going to happen quickly. And it's happening. With today's high interest rates, buyers don't have the purchasing power they once did, but sellers are trying to hold the line. So, what now?
Well, yes, there is quite a standoff going on between buyers and sellers in the market right now, and I believe the only reason that sellers are still able to hold any kind of ground is that there's not that many properties on the market.
Still got the low inventory going on.
The rates have gotten to a point where prices as they were a few months ago, completely out of the question.
Just doesn't work.
Can't be done. You can't have 7+% interest with an $800 to $1 million median price for a single family detached home. So prices have definitely come down, but sellers have kind of decided, at least last month, that hey, we're gonna hold it.
We've had enough for now.
We've had enough. We're not going to take much lower offers than we're already asking. We've already lowered our price, et cetera, et cetera. But what's going on with buyers is also quite interesting. Buyers are out there writing offers that are wildly below asking price. And it's something I've really never seen before. Certainly in the 2008, 9, 10, 12 timeframe, buyers were not afraid to insult a bank with a low offer on a foreclosure. Most of the time they weren't accepted. But in this market, buyers seem to have absolutely no shame and they are writing offers that just don't make any sense relative to data, to comps, or anything else. I think there are a lot of people out there right now that are kicking tires and just throwing stuff against the wall to see if it sticks.
And how much of this do you think is people are making offers based on expectations of what they think is going to happen in the future? Quarter 1, 2023, quarter 2?
Yeah, I mean, that's what happens in a declining market. Buyers want to get ahead of it, sellers want to get ahead of it, and it's sort of a race to the bottom, if you will. So with that, should we jump into the numbers?
Yes, let's look at some month-over-month numbers, and then we will zoom out and look at the year-over-year data.
Yeah, so November 2022, which we now find ourselves looking at what happened between September and October, so call it last month. New listings are down 9.5%. So there's 2,460 listings taken in October. And overall on the market right now, there are around 4,300 listings. So roughly half the inventory has been on the market more than 30 days, which again is unusual. So we're seeing several, call it unusual things. I'm not going to say unprecedented because I'm sure somebody can come up with an example, but unusual. Pending sales are way off, September to October, down 13.5%. Closed sales down even more than that at 17.9%. The number of homes for sale, I already said it was around 4,300, and there it is at 4,261, down 1.2%. So that's the overall inventory, overall number of homes for sale. And the median price did decline, as I've been predicting all last month, because between August and September it actually...
There was a little bump, yeah.
It went up a bit, but that didn't really mean anything.
That didn't really fit with the trend that we've been seeing over the past several months. So
no.
We're back on trend now.
Yes, we're back on trend, 3.4% down September to October. So those are the overall month-over-month numbers.
Let's zoom out to year-over-year numbers.
Right. Yeah. Let's look at year-to-date new listings. We have detached and attached here, and looking at 2020, 21, and 22, we're down 16, 10%, 10.8, almost 11% for detached homes, and 16% for attached homes year-to-date from last year. And then October of, if you look at these Octobers, 2020, 2021, 2022, new listings are just way down. And this is, we talked earlier about sellers holding the line, the ones that are on the market. And this, to me, represents sellers holding the line in terms of I've got a good rate. I'm comfortable with my payment.
I'm just going to ride this out.
I'm not completely dissatisfied with my home, so I'm just going to stay put. I'm not getting involved in this. And that's kind of, I think, what's happening with new listings. Closed sales.
Ouch.
It's ugly. I'm not going to lie. It's ugly. Closed sales are off for everyone, pretty much across the board. Big brokerages, small brokerages, agents. Sales are off. There's no getting around that, and they're off big time. 42.8% from last October to this October for detached, and a similar number for attached properties. And then year to date, now see, 2020, we had sort of a big hiccup in the middle of 2020, so that isn't really, if 2020 had been a normal year, I would expect this bar to be up here. But anyway, year to date, we're off almost 27%. So closed sales are just way down. And that just is what it is. Obviously, less homes on the market, less pending, less closed, higher rates, lower prices.
We've all seen the news.
less closed sales. So now inventory of homes for sale. We talked a little bit about the month-over-month number. We are up from last year, both detached and attached, but inventory was at what we were referring to last year's crisis level low. It was ridiculously low. It was unprecedentedly low. And so it's year over year, it's up, but still very low. And that is one of the things that's sort of plaguing the market.
It's keeping the bottom from falling out too, though. We've got short supply. So.
Yeah, short supply is definitely helping to support prices at this point. However, how long that's good for is anyone's guess. And prices are already way off in a lot of zip codes in terms of where they were, say, in April or May.
What would you say was the peak of the market?
I'm calling April, end of April, right in that, April 21st through May 18th.
And that's where we hit it was $1 million even was the median price on a single family detached home in San Diego. So
yeah,
I think that was the peak.
It was, and I think things could have sort of continued to hang out in that realm had interest rates held where they were. But again, everything about the market that we were looking at earlier this year was unprecedented, unsustainable, whatever.
And we've been saying this since last year, that we can't keep up this rapid price increase.
Right, and 2.6% interest is not going to last.
And we were saying that too. If you want to buy a house, you might want to look into getting it done because these rates are not going to stick around.
And we were also saying if you have a house to sell, do it now.
We did. We said it several months in a row.
Do it now.
People are coming back and saying, hey, what did you think it was going to keep going up forever? Well, no. Go and look at our videos from last year. We were saying this isn't going to last forever. And here it is.
We've definitely been, we're not preaching doom and gloom here. This is just reality of where we are now. But we're also reminding people what we may have said in the past, which is that the market was not sustainable as it was.
And it's going to change again.
Oh, it will.
It always does, and it happens quickly.
It will, yes.
There are a lot of folks out there who want to buy homes. We've got a few listings on the market, and people are looking at them. They're writing offers, they're lowball offers, but people are out there, they're wanting to buy. It's just they don't want to pay. They don't want to pay the prices and have to be stuck with this rate.
Right. And so here's the deceiving slide. I'm going to say it right now. This is deceiving because it shows an increase in median price year over year, and that may be true if you're purely comparing last October to this October. It would appear that median price is up, although I think as the months wear on, you're going to start seeing that number it'll get closer and closer to zero, and then it'll start to go negative.
The recent change in prices is only just now starting to become reflected in these numbers. And if you look at this year over year change here, we had 14.1%, 18, and now it's going down.
That's true. You can see it.
2.8%.
Right. Yeah, Dave is absolutely right. You can see it right here. November 21 plus 14.1, December plus 14.1, January plus 18.8.
20.4 in March.
These were the kind of numbers that we were saying aren't sustainable. You cannot have a year-over-year housing price growth of 18.8%. It just won't work. And so, we got to March here at 20.4, April 19.2, and then this is right where rates really started to spike, and then you start to see it falling. 11, 9, 6, 3, and now we're at 2.8. So that's what's happening with median sale price.
Shall we move on to why this is happening?
Do I have to?
Oh, God. Go ahead and show the rate slide.
All right, we're gonna
is from Freddie Mac.
Yeah, this is Freddie Mac's weekly rate slide.
And this is from last week. We don't have this week's yet.
And it's a little better, a tiny bit better than it has been. We've seen this at 7.08. I saw a news story this morning that was saying it was average 7.14 today.
Well, we've been looking at Freddie Mac weeklies, so let's continue with that.
Right. Yeah, this is just the weekly. So the 30-year fixed is at 6.95, and this is with 0.8. This is with 80% of your loan amount in terms of point fees to get to that 6.95. And then the 15-year fixed, which, if you can qualify for that, more power to you. A lot of people now are looking at these 5/1 ARMs to get the rate down below 6, which does work a bit. Lower fees and points on that one. And with all of these loans, you have to remember that you can negotiate a seller buy down, and sellers are going to be far more receptive to helping you buy down your rate. You can buy it down for the life of the loan. You can do a 2-1 buy down. There's all sorts of things you can do. And sellers are going to be far more receptive to that than a price reduction because it costs them less and actually helps to support prices. What I'm finding though is that buyers, they say, so what? I'm not paying that price. I don't want that sticker price on my house regardless of how low my rate is. So it's a completely different mindset than we were in just a few months ago.
Well, I'm going to link in the description to the video that you made with John Fuller about the 2-1 buy down.
Yes, the 2-1.
So that's some good information and helps buyers and sellers.
It is good information. It does help, and you could poke holes in the buy down strategy. You can poke holes in any strategy. However, I do believe that if everyone would just get on board with the buy down, we could kind of move past this log jam that we're in, keep prices from really cratering, and kind of move on with our lives. And then when inflation starts to come down and the Fed starts dialing things back, we can get back to 4.5% rates by next summer or Q4 of next year. That's optimistic thinking. Others have said we're going to get to 10, we're going to get to 12. Who the hell knows? But what we do know is right now it's high and it is causing major issues in the market.
Well, I'm going to steal your line, which is, you've said before, if you price it well, it will sell.
That's right.
So you can still sell your house in this market. It's just all about finding that right price that's going to attract buyers.
It is. And if you want to really think about, if you want to lament about how I'm not getting what I could have gotten a few months ago, just take a look at median price since, say, 2013.
We're still up year over year.
Just because things are sort of, funky at the moment does not mean real estate is a bad investment. And it doesn't mean that, if you've owned your home for a while, you're going to lose money. If you bought it in April and you sell it now, you're going to lose money. So don't do that. Stay put for a while. But it's not all doom and gloom. It's not all bad, but certainly the fear, uncertainty, and doubt is really kind of taking hold. But another thing that happens at times like this, when we get around a big election cycle, the market really slows down. Now that that's sort of in the rearview mirror, I do expect that we're going to see a few a little bit of activity before the end of the year. There's going to be a little tiny bounce before the end of the year, and then we'll just have to clean up the pieces and see what 2023 brings.
And the new Consumer Price Index report is coming out tomorrow, and we're hopeful that that's going to be less hot than it has been. Last October is dropping off, and that was a bad one. So hopefully we'll see some better numbers tomorrow, and that will start to be reflected in our interest rates.
Right, and that's what we want to see. We want to see inflation cool down. We want to see the Fed stop being so aggressive with these rate hikes, and everybody can calm down, rates can cool down, and we can just kind of move on with the new market as it emerges in Q1 of 2023.
Whatever that's going to look like.
Yep.
But we'll still be here doing a market update every month.
Yep, we'll be here as long as, we'll be here.
No.
As long, yeah.
We were here all through the 2006, 2007,
Oh, yeah.
2008 stuff. We're not going anywhere, but yeah, we're going to write it out with you right here in our chairs.
Yes, we'll be right here on our chairs.
All right, are we good for now?
We sure are.
Okay, well, thanks for watching. We hope you enjoyed this video. If you did, please like, share, subscribe, tell your friends, and we'll see you next time.
See you later.